Part 2: Building an investment portfolio with mutual funds. Now that we understand the importance of investing and the benefits of mutual funds, let's delve into the process of building an investment portfolio using these funds. 1. Setting financial goals. Before investing in mutual funds, it's essential to identify your financial goals. Determine whether you're investing for short-term objectives like buying a house or funding a vacation, or long-term goals such as retirement planning or children's education. Clear goals will help you select the right mutual funds that align with your investment timeline and risk tolerance. 2. Risk assessment. Assessing your risk tolerance is a crucial step in building an investment portfolio. Different mutual funds carry varying levels of risk, ranging from conservative to aggressive. Conservative funds focus on capital preservation, while aggressive funds aim for higher returns with increased volatility. Consider your age, financial obligations, and comfort level with market fluctuations to determine the risk level that suits your investment strategy. 3. Asset allocation. Once you've determined your financial goals and risk tolerance, it's time to allocate your investment across different asset classes. Mutual funds provide exposure to a wide range of assets, including stocks, bonds, real estate, and commodities. Diversify your portfolio by selecting funds from various asset classes, as this helps mitigate risk and maximize potential returns. 4. Fund selection. Conduct thorough research on different mutual funds available in the market. Analyze factors such as historical performance, fund manager expertise, expense ratios, and investment strategies. Look for funds that align with your investment goals, risk profile, and time horizon. Consider both actively managed funds, where professional fund managers actively select investments, and passively managed index funds, which track specific market indexes. 5. Regular monitoring and review. Once you have built your investment portfolio, it's important to monitor and review it periodically. Keep track of the performance of your mutual funds, evaluate their alignment with your financial goals, and make adjustments if necessary. Market conditions and economic factors can impact fund performance, so stay informed and make informed decisions based on your investment objectives. By following these steps, you can build a well-structured investment portfolio using mutual funds. Remember to stay disciplined, be patient, and focus on long-term wealth accumulation. Mutual funds offer an excellent avenue for both experienced and novice investors to participate in the financial markets and achieve their financial aspirations. Don't forget to like and subscribe to our channel for more valuable insights on investment strategies and maximizing your financial potential.